Hey folks, good afternoon. Welcome to Top Gun Options Market SITREP. My name is Matthew Buckley, the Chief Options Instructor here at TGO, and just got done our Analyze Your Trade and Debrief. Had another great week here at Top Gun Options, our weekly options bull put spread on Amazon. Amazon's just the gift that keeps on giving, folks. Closed that for what, a $1,935 gain or profit. What's that, about 92% of the credit that we potentially could have taken. So very nice weekly options trade on Amazon. That adds to the two previous weeks winning spreads on volatility. So make sure you're out of the Amazon weekly options trade. The other thing you got to make sure you're out of, folks, is the JP Morgan trade. So we just reviewed our JP Morgan Iron Condor. We were short some 107 calls, and we have a JP Morgan Iron Condor that's going right down the fairway. But tomorrow morning is earnings on JP Morgan, and like I've stomped my foot a bunch of times, do not hold this trade through tomorrow. The expected move out of JP Morgan for tomorrow, folks, looking at the at-the-money straddle, isn't that big, which is a little shocking to me. I would have expected I don't think the market's expecting something blistering or something imploding on JP Morgan. That's at least what the options market is telling us. Real quick strategic brief, though, folks. I had a great time yesterday watching Trump, the bull in the China shop, just walking around NATO, man, and really asking. It's shocking to have to ask common sense questions. So let me get this straight. First of all, you guys ain't paying your fair share. We're paying for you, the American taxpayer is, against this evil Russia, boogeyman. But Germany, you're now going to get 70% of your energy from Russia. It's just, folks, militarily, how can you do that? So you're going to get 70% of your energy from your sworn enemy? Somebody, and yesterday he was great. The president looking at the NATO Secretary General like, explain that. And of course, Germany, and we don't agree with that characterization. Help me with this. Somebody help me explain how we're supposed to be defending you against Russia. You ain't paying for it, your fair share, and you're getting all your energy from Russia. It strains its stupidity, folks. And love or hate the president, he calls this stuff out. He shouldn't have to call this stuff out. I mean, 8 years of Barack Obama or Clinton or Bush, just kind of status quo. And here we go. This dude really is a bull in a China shop. This is where the other China shop he's running around is, the market was exploded this week on potential not potential, 200 billion more. So last week it was $34 billion, shot across the bow. Now it's 200 billion. And what's worrying me is Steve Mnuchin, the Treasury Secretary, came out today and said what? China talks have broken down. I can't believe the Dow. Well, we're off the highs, but folks, this just goes to show you that first of all, it's a low volume rally today. I get the Dow's up $190 right now, but this is either the market's ignoring this or this is a sleeper headline. Remember back in the day, 2-3 months ago, Larry Kudlow had to come out on the White House lawn and was kind of the market whisperer. Remember that? He had to come like twice in one day, was like, hey, everybody relax. The adults are talking. This ain't going to be a full-blown trade war. Steve Mnuchin, China talks have broken down. So, and as I covered yesterday, what has China said? They're like, we're not only going to retaliate economically, but we have other ways we're going to retaliate as well. What the hell does that mean? Cyber attack, moving into the Pacific even further than they did under Barack Hussein Obama. This is why today in our live trade brief we just wrapped up, you got to look at getting long volatility. On Tuesday we looked at a bear put spread, a very rare bear put spread for me, just an overall market hedge, man, in case Q2 earnings sell off like they did on Q1 earnings. And that spread, that bear put spread, was up about 38 to 40% yesterday in a day. So I know a lot of members took some nice one-day profits on a hedge. That was great, and then and got out of it. So I'd reestablish that hedge, folks. If you did a quick strike, got out for a nice $700-800 profit on the bear put spread, nice debit spread trade. But folks, I'm just getting a little concerned with everything that's going on around the world. Now the president's gallivanting off to meet with Putin. So I'd be looking at getting long volatility. Yesterday we looked at a bull put spread on VXX, and in our session today I covered in depth what I'd be doing. Remember, with a double vertical right? A double vertical is I call it an afterburner trade. You need 3 R's. You need to be really, really, really bullish or bearish in order to do a double vertical. If I'm just really, really bullish on volatility, it's a spread. If I'm kind of like, I think something might happen to freak the market out and have volatility explode, we talked just now about going out to maybe the 25th or the 1st. This is a pilot and command decision, and just buying some in the money VIX calls. Because there's a lot of stuff out there that can reach out and touch us. And I get on a day like today, with the Dow up $190, people are like, hey man, what's up with the EOR? Can't you just be sunshine and lollipops? No, on a day like today with the VIX down 6% is a day when you look to hedge because of all these strategic issues out there that, could reach out and touch us. So, with the lull in the stock market, we're pinning our hopes on earnings, right? So be very careful. I'm getting my popcorn ready. Going to be listening to the JP Morgan call tomorrow morning to get a sense for what Q2 earnings are. Remember, it's not how Q2 earnings were. It's the outlook, right? So half the call is going to be the skipper going, here's how we did in Q2. Nobody's really going to care about that, right? All we're going to be caring about is the outlook. What's your forward-looking outlook? And I just don't think it's going to be super solid in any of the industries, to be honest with you. So very, very interesting. So take a look on a day like today where we're up triple digits at maybe getting long some volatility just in case, or putting on that SPX bear put spread is just kind of a hedge, man. And remember, my mindset is I never lose money on a hedge. Well, what are you talking about? Wiz, that trade went out and max. Well, if my hedge lost fully, what happened to my longs? Well, they printed money. There we go. Remember, folks, I never hopped into an F-18 Hornet and said, hey, Chief, why don't you pull the ejection seat out? I'd rather have the 800 extra pounds of gas. That's just stupid, folks. So don't be flying around this market without an ejection seat. And when the market's rallying like this, it is a great time to put that ejection seat in the airplane, either with volatility or just getting bearish on the overall S&P 500. Okay. All right. So I'll see you tomorrow for Friday's market wrap up. Current members, remember, we have full throttle training tonight at 7. We're going to take a look at long call diagonals and synthetic stock. Okay. So I'll see many of you tonight at 7, or I'll be back here for Friday's market wrap up tomorrow. We'll see you.